What's going on, everybody? We're back. Just going to give about a minute here to get everybody online, and then we'll rock and roll. What's up, Nikki? Always first to arrive. Bree, what's up? No. Always a quick number 2 right behind Nikki. Where's Johnny? All right, I'm going to get rocking and rolling. We got some people going on. We're going to post this stuff to all our platforms as well. We got a lot to talk about. So first and foremost, I want to give a big thank you to everybody. Obviously, I know most of this is some of our referral partners, like our realtors and attorneys and all that kind of stuff watching, as well as our clients that are looking to get some information. So I got a couple, you guys have not only just our partners, but also become really great friends and just there's some really great relationships there. So just wanted to say thank you. I've had a big couple weeks. I turned the big 4-0 at the end of August. I got a bunch of birthday wishes. Karen and I had our 10-year anniversary this past weekend, so got a bunch of happy anniversaries as well. Appreciate all of that. Thank you guys very much. Appreciate everybody reaching out. There's hundreds of people would send texts, messages on Facebook, emails, all that kind of stuff. So thank you very much. It's been 2 very important life events in terms of just like being able to reflect and be grateful for all the people in your life. So thank you guys very much for reaching out. Definitely know how to make a guy feel special. And then lastly, a big milestone last week. Our team hit $1 billion in production, and it was all over social media. So I just want to say thank you for everybody that's helped make that happen. So certainly not an individual accomplishment. There's no way I could have done that by myself. First and foremost, my amazing team who works incredibly hard for everybody, our clients, our partners, and all that kind of stuff, always kind of doing whatever it takes to just get the deals done, deliver great service level, communication, execution, all that stuff. And then obviously couldn't do it without all our great realtor partners out there, trusting us and referring us, to hundreds and thousands of people over the course of years and years and years. So really appreciate it. Thank you very much. Working with you guys is something, we're lucky to do. And then lastly, to our clients, that's at the end of the day why we work so hard, right? To help all these clients attain the dream of homeownership. And that's what drives us, that's what fuels us. Getting those thank yous and those congratulations and those clear to closes is kind of what it's all about. So thank you to everybody who congratulated us, but thank you back to all of you guys that helped make that happen. So what's happening? We got a bunch of data. It's been a while since I did one of these. I pretty much took the month of August off, so I'm back. So here's the deal. What's happening is obviously good luck to all the parents out there that are having their kids go back to school, whether it's remote, hybrid, in person. I know it's definitely challenging. So good luck to all you guys, and good luck to all the students out there as well. Back to school is definitely different this year than ever in my whole life. So hopefully the kids do great, and the teachers do great, and the parents do great. And then big week for us. As you guys know, we're a big supporter of St. Jude Children's Hospital. The walk run, the virtual 5K is this Saturday. So we're on the final stretch. We've raised a lot of money. You guys have donated a lot of money, so thank you. The event was moved virtual this year, so we're not going to Boston Common or the zoo or anything fun, crazy space, but we are, able to do it daily, and people have been doing it daily and posting on social media and raising awareness to raise money for an amazing cause. So thank you for logging all your miles over the summer. We're ending with a grand finale this Saturday with a virtual 5K victory lap. So you can participate or donate by clicking on the link in this video. But this Saturday morning at 9 a.m. is when we're going to do our victory lap. So I hope you guys can all join. We had some questions from the group, which I like to kind of answer, some common ones, and I'm going to get into a ton of data. So questions from the group. One was, Shant, do you think the election is going to impact mortgage rates? I personally don't. I think we're going to see a low rate environment through next year based on what the Fed's actions are. I think the Fed is really kind of dictating policy in terms of what's happening with interest rates right now in terms of the monetary policy they're doing. I'm going to get into that in a little bit more detail, but I personally don't think you're going to see a reaction in terms of mortgage rates come November due to the election. What loan size is too small for you? Do you care the size of the mortgage? Do you do mass housing? So in terms of the mortgage loan amounts, we don't have a minimum loan amount. We will do whatever our clients need us to do as long as it can be on a residential mortgage and it meets the minimum down payment requirements and credit score requirements and all that kind of stuff. Do you do mass housing? Yes, we do a lot of mass housing. In fact, we've been the top loan originator with mass housing for the last few years. Our company prides itself in doing mass housing loans, and our team does virtually every kind of mass housing loan they offer. So it's a great partnership for us, and it's great for our clients. Great products, great rates, and obviously helps promote homeownership. Especially there's some discounts for first-time home buyers and whatnot. So we'd love to do the mass housing loans. Keep them coming. Can self-employed buyers still get approved for a loan? The answer is yes. But it's certainly gotten a lot more difficult. Fannie Mae and Freddie Mac made some really drastic changes to how to underwrite a self-employed borrower. I think it's made it overly too difficult. We're having definitely some challenges in terms of meeting Fannie Mae and Freddie Mac's requirements. I don't think some of them are realistic. I think it wasn't well thought out. I think it was super rushed. However, Fannie Mae and Freddie Mac dictate policy, so we have to adhere to their guidelines, and pretty much everybody follows their guidelines. So it's definitely doable still. We're still closing and funding self-employed borrower loans. My biggest piece of advice is if you have a client or you are self-employed, get pre-approved as early as possible. You can't wait till the last minute anymore. Getting just a pre-approval for a self-employed borrower could be done before in a matter of a day or two. It's going to take at least a week right now because we have to review everything, have the underwriters sign off everything. We're looking at, before we would just look at previous 2 years of tax returns. That was pretty much it. Now we need year-to-date P&Ls. We need most recent business bank statements, and those bank statements get scrutinized. So definitely no changes on the horizon in terms of that. We have to adhere to what Fannie and Freddie rolled out. The answer is, are self-employed buyers still getting approved? Yes, 100%, and buying houses. However, it does require a lot more paperwork and a lot more due diligence up front on both the client's part and the lender's part, so get them in early. What are current turn times for purchases and refinances? We haven't had any delays in terms of turn times on purchases. I think purchases, the market's been hot, low inventory, ton of demand. Purchase applications are way up. So we're still closing those with whatever it takes in the market to get those done. So we're seeing purchase applications come in for 30-day closes. We're executing on those, whether they're conventional or jumbo. Now, obviously, we would love more time. If we get 45 days, we'll take it. But ultimately, at the end of the day, we're going to do what we have to do to help our clients win and help our realtors negotiate successful closing dates and help their clients win the deal as well. So on refinances, we're definitely seeing a longer turn time on that. So across the industry, I'm seeing lenders take anywhere from 60 days to 120 days to close refinances. There was a massive surge in terms of refinance demand. At the same time, there's a surge in purchase demand. So refinance has definitely been a challenge in terms of closing those in like 30 or 60 days. We're definitely going to get back to those levels. We're doing everything we can from a process, operational efficiency, staffing, all that kind of stuff. We're putting major effort and demand there. Definitely not where we want to be. I don't think the industry is where they want to be, but we're closing them. We're closing record amount of refinances. Rates are amazingly low. We're locking in rates for 90 days so that clients don't have to worry about rate lock fees or extensions or missing out on these amazing low rates that are going on right now. And last question, can you explain desktop appraisals? People are worried that their desktop appraisals will not appraise the same way as a regular appraisal. So the common feedback I get is, hey, the appraiser was in and out of the house in like 15 minutes or sometimes 5 minutes. They're ultimately in there to measure, take pictures, make observations. That's not happening on a desktop appraisal. They're relying on realtor data on MLS. They're relying on public data, public records and all the information available through the towns and cities. They are talking to the real estate agents. I've recommended that realtors, listing agents speak to the appraisers even when they call and ask for the data. Don't just blow them off. It does definitely, a desktop appraisal, in my opinion, definitely leaves you open the opportunity to miss stuff, right? Like, you can't, if the appraiser doesn't walk through there, maybe they don't, and it's not clear in the listing photos how great, everything is, the upgrades, the new appliances, maybe a finished basement or attic or stuff like that, any missing data. So it's really, really important if there's a desktop appraisal happening that your MLS data and your pictures and everything are so spot on. I would just assume when you're creating a listing that obviously you want to make the property look as amazing as possible. Put all that content in there so that the appraisers can't miss anything. And if stuff gets missed, it's not the end of the world. If a big important piece of data is missed, you can definitely go back to an appraiser and say, hey, you missed this. It's not final if they missed important data, so it's not the end of the world. We've done a ton of desktop appraisals with no issues, but that's just my opinion in terms of the differences. All right, so ton of data here. I want to go through, give you guys my opinion on a few things, and rock and roll. So mortgage application data, refinance demand is up 30% versus a year ago. Now, last fall, we were actually already doing a ton of refinances. Rates had dipped because in 2018, rates were in high fours, almost 5%. 2019, they came down into the mid to low threes. So we were already refinancing a lot of people last fall, and applications are 30% higher than last year at this time. A refinance boom was already in full effect at this point last year. So the fact that it's that much busier is a pretty telltale sign as to what's going on. Purchase applications are 6% higher. Last fall was actually pretty robust. I remember realtors, again, rates had dropped. And then on top of that, the economy was surging, so you had really a lot of consumer confidence. So purchase applications are also higher than last fall and definitely higher than the fall before that, which was kind of had slowed down a little bit. Purchase activities outpaced year-ago levels for 17 consecutive weeks. That's pretty great. And the other thing we've noticed is home loan sizes are actually going up. Now, it's two reasons in my opinion. Home prices are steadily rising because the higher priced homes are the ones available for sale right now. The inventory shortage that we're seeing is definitely on the lower end of the market. That's where stuff's getting gobbled up right away because it's more affordable. So I think those are the two reasons home prices are home loan sizes are going up. I think the other part of it is that with rates being low, at first when Corona really kicked in and we had a shutdown of our economy or our markets. Fannie and Freddie were the only game in town for a little bit. Like that was the only mortgage you could get. So loan amounts $690 or less was where the pricing was, and that's where kind of the market was also moving as well. The jumbo market definitely froze up in March and April. Jumbo lending is back in full effect, and those rates are amazing too. So I think that's also contributing to mortgage loan amounts increasing. Industry data. So I woke up this morning, saw a really great article. Home sales surged to a 14-year high, which is it's crazy if you think about what we're in the middle of right now. We've got obviously this pandemic that's been going on for 6 months now. We've got wildfires in California. We had the stock market come down. We had unemployment go up. And obviously the stock market's recovered, unemployment's recovered, which we'll talk to in a second as well. But the thing that, home prices home sales surging to a 14-year high back to 2006 levels is crazy. I have a little bit more data on that, but there was almost double the amount of homes for sale back in 2006 when home sales were that robust. Also good news is, last month, last month's data was released a couple weeks ago about unemployment. So unemployment, as you guys know, I've talked about a bunch of times in here, was increasing, right? So when before coronavirus, unemployment was at all-time low levels, 3%. And then unfortunately, millions of people started losing their jobs month after month after month. Unemployment surged to 15%, okay? Well, good news is it ticked down, and it's steadily been decreasing since it got up to 15%. Ticked down from 10% in July down to 8.4% in August. Definitely great to see single digits again in terms of unemployment. We're definitely trending in the right direction month after month after month. The economy's opening back up. People are going back to their old jobs. People are going back to new jobs. Obviously, as much as some industries have been impacted, and maybe might not be the same, a lot of new industries are really surging and doing great. So that's definitely good to see unemployment going down as our economies come back online. Another positive sign was the average hourly earnings posted gains too. So both great signs that people are going back to work, making money, and also on the unemployment benefits, some of them have stopped in terms of like the weekly stipends and all that kind of stuff. So people are going back to work, and that just makes our economy tick. Existing home sales are up 2.5% in August, continuing on a 3-month roll, which has been great. Year over year, sales are up 10.5%, okay, which is the highest pace since 2016. Again, like I said, 2006, not 16. But back in 2006, there were twice as many homes for sale. So this definitely speaks to the strength of the current housing market and the desire for U.S. citizens and Americans to buy homes in this market. I think with rates remaining as low as they're going to stay, and the job market continuing to recover, I think we're going to have a really robust end to the rest of this year. So, I'd say we've been saying that, really since this started. We saw definitely a 2-week lull, a 3-week lull, but then we just saw the interest in terms of homes, second homes, investment. Like it stayed really consistent. We see it early because we're talking to consumers every single day as they call and start asking questions, and we see their activity. So it wasn't just, a lot of people, but you're just positive. You're just, you're an optimist. And, definitely that's the case a little bit. But, in terms of just looking at the numbers and the activity of people, we've been saying that our housing market was going to stay strong. I think rates played a big part. I think the Fed played a big part. I think everybody realized how important the housing market is to the overall economy, and I think we did a lot of the right things. And then I think there's other factors, which I'll talk to in a second as well. Inventory still remains tight, 19% decrease year over year. So, kind of crazy, right? 14-year high in terms of home sales, and but there's 20% less homes or 19% less homes year over year. So that's why you're seeing bidding wars and appreciation. I think a big key to this whole thing is going to be new construction. Certainly making new homes, if you have super low inventory, high demand, and then low rates, you're going to see home prices keep going up. And that's obviously going to make it challenging for first-time home buyers. It's going to make it challenging in certain affordable neighborhoods that will get priced out as people start going there and driving those prices up. So I think getting new construction going, getting those permits going, supporting builders, supporting developers, in as many markets as we can, I think is going to help in terms of affordability and creating inventory. I think that's really the only way you can do it. Definitely some challenges in that world. One thing I've noticed for sure, the cost of lumber is going up like crazy. Okay, first it was due to shipping constraints with the pandemic and material coming in from China. Now obviously we've got the wildfires in California and the West Coast, and that's definitely creating another surge in terms of lumber availability. So I've already talked to clients that have had building homes in the suburbs or wherever, and they've gotten calls from their builders already increasing the price of the home that they already agreed to because the price of lumber has gone up, and so the cost to build's gone up dramatically. We got to find ways across the U.S. to definitely promote new construction. I think that is going to be, I think we're going to have an inventory shortage for years and years and years. I think promoting new construction is going to be a massive, massive part of what we can do to level the playing field, especially for first-time home buyers. All right, rates. Rates are still at historic lows, averaging, in the high twos, right? 30-year fix is kind of what we always talk about. We're seeing, in purchases, mid to high twos, refinance the same thing, high twos. It's been amazing. I mean, I get fired up every time I can say something with a 2 in front of it to a client. I never thought I'd be in that position. I think they can hear it in my voice. People are really, really excited in terms of the savings. One of the things we talk about when we help them prepare for a home is budgeting for monthly payments, down payments, closing costs. And that monthly payment number, whenever we talk about rates, is definitely coming in lower than what a lot of people budgeted for. So it's creating more affordability in a tighter market, which is a good thing. I think rates are going to stay low. Fed's continued commitment to zero interest rate policy combined with the central bank's purchase of mortgage-backed securities is going to keep the 30-year fixed rate either unchanged or even, I think there's some potential for them to even go lower, which is kind of crazy to think about. The Fed had their 2-day meeting last week. As expected, it left the benchmark rate unchanged. And the Fed slashed rates to near zero about 6 months ago when the pandemic first took hold. A lot of the Fed officials are signaling that rates could remain low until 2023. So we got a nice long runway in front of us in terms of what could happen in terms of mortgage rates. I think there's going to be a huge demand for refinances next year as well. Some people are aware, some people are taking advantage of it. Not everybody is. The amount of homeowners across the U.S. that should be reevaluating a refinance is a massive number, and we're trying to get to them one by one by one. So we'd love to help you with that if it's something you're interested in. Lastly, trying to wrap this up for you guys with 2 takeaways. One, I think the past few months has shown how valuable real estate is to Americans and to our overall economy. I think that's clear. I think that's really helped prop us up. I think our clients are all rethinking their locations and they're redesigning their lifestyles, right? I've said it on every single one of these calls. Your home has become more important than ever, okay? You work there, you live there, you work out there, you entertain there, you school your children there. So what you need, I think, is much more important, and people are just reevaluating that. And on top of that, okay, there's a really interesting report by Zillow. I read it, and I'm going to kind of share some of the information. Obviously, telecommuting is growing in popularity, right? And I think a lot of industries have realized that there isn't a decrease in productivity when people work from home, right? So I think we've definitely seen that. We've had our biggest months ever where our entire staff's working from home, and it's been great. There hasn't been a drop off the way we communicate. We just kind of learned on the fly. And technology, I think, and I said this in one of the calls a few months back, but the technology's allowed us, between having the phones and the Zoom and all the different kind of methods of communication and texting and messaging and all that kind of stuff, and the way we communicate with our clients has evolved, and the way that clients take information has evolved. So telecommuting is definitely here to stay. It's growing in popularity as more companies establish work from home protocols. I think with this new flexibility, Zillow is saying nearly 2 million renters or 2 million rental households could become homeowners, right? That's a lot of people that can essentially live anywhere they want now. Think about it. If you worked in Boston before and had to live and pay expensive rent in Boston, maybe you didn't have a car, now you can go out to the suburbs as far as you want, or you can move to another state. As long as your employer doesn't need you in the office, the flexibility there is amazing. We've already seen a lot of clients go west, go south, north, go to New Hampshire, Vermont, Maine, all these places as their primary residence, and they're not changing employers, but their employers don't expect them to be there, or expect them to be there a lot less. So that's a huge key in terms of affordability, in terms of what your income can now, before maybe constrained to being a renter close to work. Now you can be an owner as far away from work as you want to be, within obviously reason. We're seeing renters who are employed at a job, if their work can be done remotely and they're priced out of their current market, they can afford to buy a typical starter home anywhere in the U.S. I had some clients, living in the city, working in Boston, and moved to North Carolina, upstate New York, fully with no intentions of coming back, but also their employer is completely good with it. So it's their affordability and their savings and everything has dramatically been altered for a good thing. So Zillow is saying it's millennials who have the greater chance to become a homeowner, benefiting from the ability to work from anywhere and live anywhere. This generation represents nearly half of the 2 million rental households, right, who could afford homeownership. So I think the reason that millennials, I think why Zillow is saying that is ultimately, if you're a millennial, that means you're younger, right? And that means you've come out of school maybe with student loan debt, maybe paying expensive rents, so less savings, less disposable income. But now, you don't have to live where you thought you were going to have to. Again, you can go out further away and potentially buy a home. So I think you're going to see inventory challenged by this specifically. We talked about low rates, but now I think the telecommuting is going to push people out as far as they want to be. I think it makes it much more attainable, which is a good thing in terms of home ownership. And I think that's going to be one of the biggest challenges in terms of inventory. And that's why I think that new construction piece is so important. So I always like to leave with a tip to our referral partners, or to our clients, or to anybody who's listening that can benefit from this. But to my realtor friends out there, or if you're a consumer, this all works, right? Start the dialogue. Reach out to your database. Don't assume just because you helped somebody 6 months ago, a year ago, 2 years ago, that they're happy where they're at, or they're not thinking about moving. I think everybody's kind of reevaluating everything. As I said earlier, I think our clients are rethinking their location and redesigning their lifestyle, right? And they might not be, the world's changed a lot in the last 6 months, right? What's important and what people need is drastically altered, right? So I think our clients are, and I know that when I say I think, I'm talking to them every single day. Telecommuting is impacting where they thought they needed to be and where they might want to end up ultimately being. We're seeing a major push in terms of second homes. I've said it a few times, but Vermont, Maine, New Hampshire, upstate New York, you talk to real estate agents or even consumers trying to buy in that market, they'll tell you how crazy it is up there and demand like they've never seen before. So people are thinking about those type of things as there's less like airplane travel and, discretionary spending on vacations and all that kind of stuff can now be focused on buying a second home, which all the second home markets, Cape Cod, they're just, the inventory is down, everything's getting gobbled up. We're seeing bidding wars in markets that we're not used to seeing bidding wars in. And then ultimately people want more space and need more space to be happy with where they live. So I think that's what's going on. I think it's really, really important to start the dialogue and just be like, hey, has your lifestyle changed? Is telecommuting impacting? Are you thinking about moving? You know, are you thinking about changing house? Do you need more location? Do you need, more space? And then are you considering a second home? I think the second home piece is key also to expand, make sure you have an expanded network of trusted resources. Now, fortunately, we can help you wherever you go, right? We're licensed in 49 of the 50 states, and 50 should be wrapped up next month. But, so we're helping clients move all across the country and do their mortgages for them right from here. But I think it's really important that, if you're a real estate agent, your clients are talking to you, you want to put them in touch with a trusted advisor that's going to take as great care of them in the states they're looking at as you would if they were here in Massachusetts or in the other markets you do business in. And I also think that, I think clients really want that trusted resource and somebody that's been vetted out, that's reputable, that's going to do a great job for them in a new market or uncharted territories for them. So that's what I got for you guys this week. I try to keep these to exactly a half hour every single time. So all I got for you, got big game for the Celtics tonight. We're in the playoffs. We got to win. It's almost like a must-win game for them. So go C's. And it's I would say it's definitely refreshing to see the new look Patriots, new quarterback. Now we got two teams to root for. Me personally, I'm still rooting for Tommy as long as they're not playing for the Patriots. But go C's, go Pats. I hope you guys have a great week, and we'll be doing this throughout the rest of the year for you guys. Appreciate everybody. Have a great week.